my experience. I've extracted a lot of my experience and my input, what I see a lot of agents do. So I hope you guys are excited about this. Thank you for being here on a Monday this early. That's a testament to how you guys want to really, move your professional career. And we here at London Foster are here to help you do that, to build your platform, to accentuate your brand, to help you bring more business. So again, thank you. And with that said, I'm going to get right into it, okay? So what I'm going to do with this presentation, I know on this call, there's a lot of people who are beginners. Whether you're a beginner, you're going to get a lot of good tangible information. Even if you're experienced, trust me, you guys will also, maybe getting a lender's point of view, you'll be able to, garner some good takeaways here. All right. But by the way, what I'm going to do today is I'm going to break this up in like 3 sections. I'm going to do what you need to do before the transaction or before you put in an offer, what you do when you put in an offer, and then the last one is going to be just the extra strategies that you can, pick and take depending on the situation that you're dealing with. All right. So, first one here is the must-do strategies. Again, this is something that if I was an agent, and some of the really good agents I see, they do this on every single offer that they put in, okay? And the first one is get to know your buyer's initial expectations, all right? A lot of people really overlook this simple thing. And I know it seems very basic. I mean, basically you're asking, okay, where do you want to live? What type of property you want? All these basic things, but there are more deeper questions you need to ask your client. And these things are all surrounding money, okay? Once you're obviously going to do your job, you're going to find out where they want. You're going to find out whether they want a condo. You're going to give them all the perspectives about the area. That's your profession. But one of the things that really get overlooked is how much money are they really, when it comes down to it, are they really willing to spend? Okay, so when it comes to the money, there's 2 parts. How much savings do they have to purchase? I can't begin to tell you how many times I've worked with agents that sent me a client. They were actually pre-approved from another from another lender. They were great. They had great credit. They had a fantastic job, but they barely had 2 nickels to rub against by the time I got their bank statements, because they thought their sister told them that they only needed, or maybe they were buying in a buyer's market. They got grants and all that stuff, and they only needed $10,000. And that's not nearly enough. So you want to find out how much savings do they have. Okay. So here's an example. Let's say you have a client who's purchasing a $360,000 property. And usually if they're going through a first-time home buyer program, you realize that they have $30,000 cash to close. Do they have it? You want to know whether or not, do they have that? They may say, hey, you know what? Once you find out $360,000, I'm going to talk to you about this towards the presentation, but usually a good rule of thumb I always tell people, especially if they're going through a first-time home buyer program, is if they're buying, usually just a number that you want to use is anywhere from 8 to 10% of that sell price is what they need. So if they're purchasing a property that's $360,000, you realize they're just using that quick rule of thumb, that they need at least $30,000. If they tell you, hey, I have, my family's going to give me $10,000 and I have another $10,000 saved, now they're going to need at least another $10,000, especially since it's a seller's market. So why spin your wheels? Why do all that work when you know that they need another $10,000? Some people hear, wow, this guy has $20,000, great job, this and that, but they don't hone into those details, that the fact that another $10,000 might take them another 6 months to save up. Are they receiving any gifts? Ask them, let them know that, we have programs that allow them to receive gifts. So again, these are things you want to know up front. How about the monthly mortgage payment? Same example, $360,000, they go through a first-time home buyer program. And their payments for a property like this would be, let's say, $2,400. you find out when you ask them, what is, if they tell you that they don't want to spend any more than $1,800, why waste your time? Why waste your time if they're, and it's showing them a property that's $360,000, you got to reset their expectations. Don't show them, even though they qualify and they qualify for 360, don't waste your time. I've literally had people go under contract, do all this stuff. I got the contract at the 11th hour. They thought I could do some sort of miracle, and they were not willing to pay what it is, even with the best interest rate, the $2,400. Here's what's interesting. The difference between the $1,800 a month payment versus the $2,400 payment is a difference of $120,000. So that in itself, instead of a $360,000 property, if they tell you their absolute max is $1,800 because they have all these other expenses, then don't waste your time showing them, even though they qualify, keep them under $240,000. That's the maximum. One of the things that I want to tell you that, this training is obviously strategies about how you can submit offers and get them accepted. But at the end of the day, this is more so a time management. This is really a course of how to be more efficient. And the more efficient you are, the better your offers are going to be submitted, the better, the better return or conversions you're going to have. So what do you do again? The things that you do before the offer? Determine your buyer's maximum budget limits. So now you have an idea what their initial expectations are, okay? Now go to step 2. Determine what their maximum budget limits are. Now here's a funny, probably I had to throw this in because I think it's me and Bob's one of our most popular or favorite videos or movies, that is. And that is determining, it's about baby steps. So I got to show this to you. But the strategy, I like to call it, is using the baby step strategy to figure this out, okay? I'm just going to play this first.
Baby steps. Oh, boy. Baby steps. Baby steps. Baby steps through
Bobby, can you hear it?
Yeah. Baby steps out the door.
Yes.
It works. It works. All I have to do is take one little step at a time, and I can do anything.
If you guys ever seen it, you got to watch. It's a great movie. What about Bob? But anyway, so the baby step strategy. Let me tell you what this is all about. It helps you basically determine what their maximum budget limit is. And one of the things that I do is I actually do this in my own business. Whenever I'm pre-approving somebody, one of the things I always do every single time I pre-approve a client, I always ask them, I have a thought-provoking question for you. And here's the reason why I ask this question. I pose it. I pre-frame that question this way. I do it because many times people are buying, they're super excited, they're overzealous, they want to purchase. I want them to take a step back, and I'm trying to let them know I want them to give me a very thoughtful question. I want them to think about this. And one of the things I'll say to them is, Mr. Jones, if you found the dream of your home for both you and your family, what would be the maximum but maintainable payment you would be able to make on a monthly basis? Right there, what I'm doing is I'm setting the expectations, okay? I'm trying to get them to realize their expectations. I'm getting them to realize their expectations. So if they tell me their maximum housing payment is $2,400 a month, okay? And that would, again, as based on the previous slide, that's going to get them about a $360,000 property, right? I ask them, hey, would you be willing to get this property for $2,450? Would you pay an extra $50 to get this property, dream of your home? They say, I don't know, Joe. I mean, $2,400. I actually don't want to spend really. I only want to spend $2,000, but I guess I'll go 24. But 2450, yeah, maybe I would. I'll go 2450. Then I ask them again. I'm taking baby steps. I'm just trying to get them. I'm trying to push their limits to see where do they want to go, especially in cases where I know the client can afford a lot more. Now, this doesn't happen all the time, but again, the goal is to try to find out where their limit is. I'll say, well, would you go 2,500? I see your point. Okay, yeah, maybe I will go $2,500. How about then I keep going 20? How about 2,550? 2,550, Joe, you're really pushing it. I don't know, but and I have to remind them. How about again? It's the home of your dreams. I go to 20. I'll go to 2,600. If they come to the point and say, okay, I get it, home of my dreams, house that knocks my socks off, but 2,600 would be the absolute max. I'm not going to even go 2,601. Now you know where they're at. Now you know what their maximum they're willing to pay. And you're not doing that when you're in the heat of the negotiation. Do this stuff up front. Have these questions up front. Well, obviously I have these questions, but I think it's also a good, for the realtor as well. But I like to do this because I want the deal to close just as much as the agents do. And I don't want them to have the buyer's remorse at the time of application as they're going through this whole process. So I like to nip it right in the bud, get them to understand. Here's the funny thing. If they actually do decide to say, if they go from $2,400 and they know it's a $360,000 property and they're actually willing to pay the extra $200 and that's their limit, here's the interesting thing. Now you can offer a price up to $400,000. That's an extra $40,000 that they can qualify for. Okay. And if you look on each increment of $50, it gets you about a $10,000 increase on the finance as far as the purchase price. So here's a little great takeaway, a good rule of thumb. Usually if they're getting financing, and remember, keeping everything the same, taxes and insurance, same home, okay, same association dues, if there are any. If you increase the sell price every $10,000, it's going to increase their payment about $50. And vice versa. If they reduce it, it's going to reduce it about $50. So that's a quick takeaway you can use. Okay. So how can you apply this strategy? Baby steps, remember? You're asking, what is the highest that they're willing to go not to lose this house? If you pose that question that way, it gets them to really think critically. Do critical thinking.
I was going to ask you something about that. I'm sorry, I didn't mean to interrupt you, but I was going to ask you something about that because knowing that $50 will increase the price every $10,000 is good to know. It's a good rule of thumb, kind of be at least close to being accurate, so that in this competitive market you can kind of determine or visualize. Well, if I go add another $50, or maybe you can increase the price 10,000, adding $50, but you have to balance that with, okay, knowing that what the appraisal is going to come in at and how much cash they have on hand to go above.
You're beating me to the punch. Okay. Great point. But that is very true. And I know a lot of you guys are thinking that. So I'm going to touch on that coming up in the next sliders. Okay. But yeah, this is what this is all doing though. Right, Bobby? What we're doing is we're getting to think ahead of time. So you're not dealing with this at the 11th hour. And that's the key. That's what's going to make you more of an efficient realtor, more prepared, so that you can help them, even if it's uncomfortable, do the things, because they didn't hire you to make it a comfortable process. Everybody knows this is never a walk in the park. They got you because they know that you're going to take them from here to keys in their hand. And that's the goal. And that's what you need to relay to them. So giving them these perspectives is very important. So like in this case, we're trying to, we're framing the question, what is the highest you're willing to pay not to lose this house? Okay. So if the initial offer is 360, okay, on a property, ask them, would you be willing to lose this if it was countered at 365? Okay. Would they pay the extra $5,000? Ask them, how about willing to lose it at 370? So on and so forth. Keep pushing them. Ask them, would you be willing if it was countered at 375 versus 380? Okay. If they, the goal, let's say you get them to 380. Okay. Now you know your max. Now, of course, you got to ask those questions, other items become important. Like, what are their resources? Do they have, let's say the property might not appraise at maybe the most will appraise is 370, and they're willing to go 380, maybe they have the extra 10,000. So you got to have this question. You got to ask them, or maybe they can get the financing. Maybe it's a property that has a little bit of wiggle room. You realize that it's, it's been an under market, and you can, go up another $10,000. Are they willing to go up? Oh, again, I'm reiterating the difference between the initial 360 that they were at to the 380 is $100 difference in payment if they do get the financing. Another way how you can apply the strategy: what is the maximum cash they are willing to spend not to lose this house? And this is what Bobby was just talking about. You have to ask this question. I'll use the same example. Well, okay, basically, if the borrower has, let's say, $50,000, okay, and they tell you, they say, Joe, I have $50,000, but 30,000 of that is the maximum I want to spend. That's it. I want to keep another $20,000 in case I have repairs. I want to keep some reserves. Okay, fine. Again, try to push the limits. Find out what is the maximum they're willing to spend. Pose the question: if you find your dream home and the property comes in at 360, cash to close in this situation is about $30,000. Down payment, closing costs, pretty much everything. Ask them, are you willing to go over $5,000 over the appraisal value? So in other words, if the property, let's say you bid very aggressively at 360, okay, and it's aggressive, and you as the agent, you need to inform your client, listen, if we bid 360, I think that we're going about, it may be 5,000 above. Do you have the extra 5,000 above the 30? Are you willing, if the appraisal value comes in at 355? They say, okay, you know what, 35, I still have 15, no problem. I'll go another 5,000. Push it even more. Say, are you willing to lose this home, your dream home, the home that you love? You've been pounding the pavement, you're tired, this is the one that you feel you really want. Are you willing to pay another $10,000? Are you willing to give $40,000 and still hold another 10, So the goal is really to find out and just nip it in the bud, find out what is the maximum amount that they're willing to spend on a monthly basis, and what is that they are willing to let go of as far as how much money they're willing to spend when it comes to their assets. Here, I'm on this slide, I just want to show you guys this. On my mobile app, and you guys, if you go into, as Memo says on every training, and I know Bobby does too, you can get my information on the vendor site under the mortgage. If you go there, you can apply for my mortgage app. You just got to put in your name, number, even your photo. It's so that you can self-brand yourself. But what's really cool about this is you can actually, it helps you perform this exercise, not only for yourself, but for your clients as well. And if you look here, you see where I'm using the same example, $360,000 home price. In this example, the tax are $6,000, the homeowner's insurance is $3,000. In this case, there's no PUD dues or any type of association dues or anything like that. There's no association dues. So in this case, you'll see here to the right that the payment's actually just a little bit under $2,400, $2,371. But it's really nice because what they can do is, again, they won't necessarily, once they have a property locked in and they're trying to realize what that maximum threshold that they want to spend, they're not going to move the taxes. They're going to keep the insurance. They're going to keep all this the same, but they can just start with this slider, reduce it, or even manually reduce it to three, or increase it rather, 365, 370, 370, 375 to see how their payments are going to go up. Okay. In case you lose, you forget about the $50, but they can actually see the real numbers and they can see the breakdown. They can see the principal and interest, the taxes, the homeowner's insurance on a monthly basis, even their MI if they have it. And what another really nice thing about this app is if it's Sunday late and they were initially pre-approved for 360, but now they want to put in an offer for 370 and they only have a letter for 360 and it's 11 o'clock on a Sunday night and Memo wants to put in an offer for you, because he wants to make sure you get the deal. you don't have to worry about calling me. You can just simply change it here on the app and hit get pre-qualification letter. In real time, it will already analyze and know that you're approved, and it will send you the pre-approval. Okay, so you can get a pre-approval on demand. So this is a really cool app. I just want to throw this in there so that you knew you have this as another tool. Okay, so moving on to the next thing, right, is have your buyer's financials in order. Remember, guys, these are things that we are doing before you're putting the offer in with your client, with your buyers. And one of them is, well, with cash, when it comes to a cash offer, obviously these are the best deals. You love that. You want to make sure you have their proof of funds in file. Okay, that's important. All right. I've had many times where people spin their wheels because they heard they were a doctor. They were so excited that it was going to be a cash deal, and then they even never got their proof of funds. And by the time they did all that work, getting them on a contract, they couldn't even provide that. Or maybe they can provide it, but it takes time, and you need to know these things. If they're getting mortgage financing, you guys know this. It's extremely crucial to have these things in order. Okay, starting off with number one, having all the buyer's documentation. Now, I'm not saying it's the realtor's responsibility, but you are their advisor. You want to tell them they need to get in touch with their lender. They need to make sure they go, even though it's a pain in the ass, and they might have to go somewhere to get go to their employer, to HR, to get their W-2 or something like that. They have to do these things. It's vital, because it's not doing this is just going to slow the process down. Okay, on my home buyer seminars, they should do hundreds of them every year, and this was one of the biggest reasons why why deals actually go south, is because buyers just don't have their documentation together. Conventional loans recommended. All right, now, guys, I'm a lender, and I have a very good understanding of FHA and government loans, and they're great. In fact, I even have an FHA loan. But in the industry, there's kind of like an understanding where conventional loans are the better loans, and for good reasons, because when it comes to a conventional loan, they have a higher standard. Back in the day, we used to be able to get loans that were with clients that had a 630, 640 credit score, and we can get them a conventional approval. Now it's almost like hit or miss if they have a 640 credit score. Not that you can't do it, but everything really has to be strong. So the realtors know this. They relay this to their clients, the sellers, and they advise them, look, it's better to go with a conventional deal. Now, I'm not discouraging you guys if you have an FHA client and that's all they can do is go FHA, but I'm just saying, in situations where you have when you have a borrower, let me see here. When you have a borrower that is that they may have, let's say, a 650 credit score, and your lender says, I've done everything I could, I can only get them qualified for FHA. All right. Now, I don't want you to, stop from showing them a property. Show them a property, and you very well may get it under contract. But if you're putting in offers and you're in maybe a real competitive area, and you're not getting the offers accepted, then it behooves you to start advising your client to just maybe do a couple things. Maybe they just got to get their credit scores up 10, 20 points. Maybe by paying some of their balances down may allow that, and that will push them over the edge for your lender then to try again and get them approved for a conventional loan. That way, you're not losing a deal if you're exhausting and nobody's accepting the FHA offers. Also, maybe they might need to save some money. They've got to maybe the reason why they can't get qualified for a conventional is because their DTI is too high. Maybe it's a matter of they have $50,000, they only need $40,000, but they have to pay $5,000 off on an automobile, and that will reduce them so that they can qualify for a conventional loan. So my point here is to do your best to try to get them approved for a conventional. That's why whenever and my team knows this, when I have a client, even if the client wants to go FHA because his family did it, or his coworker told him it's the best thing, and they bought during the buyer's market, I tell them, listen, always still qualify them for a conventional loan. Okay, give them the FHA, but at least still qualify them so they have it on the mortgage app. And if they want to send a pre-approval for a conventional loan, they can just go on the app, boom, send it out to get the offer signed, sealed, and under contract. So you got to reset the borrower's expectations. Let them know this. This is what I do when I spend a lot of time letting the borrowers know these options, because part of our job is, again, setting the expectations, advising them. Yes, we do a lot of our, what we do behind the desk, looking for properties, showing them properties, analyzing, calculating what's the best. But we have to also let them know and let them be well informed so that they can feel more comfortable. And really, it's a great way to really build rapport, and they know that they're working with someone professional. Use a local lender. This goes a long way here too. Okay, here's the reason why. A lot of these internet companies, like Quicken and many other internet companies, their business model is it's a numbers game. I mean, it is a mass numbers game. They spend millions upon millions. You see the commercials on just getting people to come in and call. And what they do most of the time, I can't tell you how many times I've had someone who had a quick and a pre-approval or some sort of pre-approval from East Jabip Mortgage that was, no one knew where it was at, or was across the country. Here's the thing: a lot of these lenders will just send out not pre-approvals. It's actually pre-quals. They'll just send pre-quals based on the information that they get. They don't necessarily get all their documentation. They realize if we can send out 100 pre-quals, by the time we do get all their documentation, we'll have maybe 10 actual pre-approvals. So use a local lender, someone you trust, someone that's going to do a thorough job. That's something I tell clients this. I say, look, I can send you a pre-qual, but I'd much rather have you be 95%, because when I send a pre-approval, I'm 95% sure that deal will close. No questions asked. Here's the reason why the other 5%. I don't know if something's gonna happen at the last minute. They're gonna get, and on their jobs, or maybe there's an issue with the appraisal or the property. The seller's not gonna do a repair. But I know within 95%, I'm 95% sure on our end that we are gonna get that deal closed, or that deal will close. So many times you'll find that with a local lender that you have a relationship with, and also it makes the listing agent more feel a lot more comfortable, especially if they're familiar with that.
Joe, could I ask a quick question about that?
Yeah, sure.
Because maybe if you can reiterate that fact, because when you get a pre-qual, it means absolutely nothing. Like if you gave me a pre-qual and you quoted me a rate, I can't come back and say to you, well, that's what you said to me, you have to honor it. It's basically a guesstimate, correct?
Absolutely. Just like
so when you get a pre-qual,
you're absolutely right. You're absolutely right. You can go on the internet and you can say, oh my gosh, rates are 0.5% below what Joe's telling me the rates are. And what you're not realizing is they're basing on best case scenario, all these assumptions that you're not even aware of.
I'll tell you why I brought it up is because I have a client who happens to be my sister, who makes a lot of money, owns 6 properties outright, was buying a not very expensive property compared to the portfolio of properties that she owns, completely paid for. Because she had 3 small mortgages, the pre-qualification came in, I think it was like 4.2%. This is a couple of years ago, and it was a very good rate. And she ended up paying 7. Because at the moment of actually getting into it, the bank that she was working with, which I don't know if I should say it, but the bank that she was working with basically says she was overexposed. Now, this is someone who owns 6 properties that are worth 800, 600, and these are mortgages for 200,000. So in the numbers, it doesn't make sense. But to them, it was like, well, what happens if a hurricane hits, you lose your job, all the tenants leave, and you've got to pay 3 mortgages, you could lose all 9 properties.
Right.
And they basically changed the whole thing. And, you know, when we went back, and she was very upset with the mortgage banker, and she was like, listen, you promised me. It's like, that promise means
Yeah,
nothing.
and at that point, they're already locked in. They paid appraisal fee. They've already in their mind moved all their furniture in the property. They got all these emotions round up. So what ends up happening is they close on a deal and feeling really scorned and having a bad experience. And one of the things that I like to do when I work real close with the agents I work with is have this type of dialogue. So we're nipping this stuff up in the front. This part, you're like, I'm really looking for these strategies, but this is the strategy. Probably 80% of what's going to make a deal close efficiently and guarantee, that you will get a deal is having these issues addressed up front. And me as the lender, it's my responsibility to do the same thing. But people, this is, and I lose. There's times I lose, people. And the reason why is because they're so overzealous. They just, I already got a pre-approval of this, and my brother-in-law told me I can get this interest rate and this. Look, the way I tell my clients, if you want me to help you, you got to follow my rules. I need to have your documents. I need to have all this stuff so I can actually give you the right feedback that you need so that you can move forward. You might not like what I have to say, but I can promise you this, you'll know that you can take it to the bank. I'm not going to change. It's going to be guaranteed. And typically they find that out at the 11th hour. So in the spirit of again, setting all this is what you do before the offer, setting the expectations. Another thing that you as the agent can do is prep your client. Get your clients prepped up on what they're about to deal with. Okay. And by the way, when I talk about prep your client, this is what I mean about that. That you're going to have to show them the first deal. I mean, they're going to ultimately put in an offer on a property. When you put in that offer, you're going to have to go over all the items. You're going to have to, go over 20, maybe 40 pages on that initial deal. But they're going to have to sign, review. They're going to have to, you have to prepare it. You have to send it over to them. They're going to have to review it, get back to you. Do that ahead of time. It's just, again, being proactive. Time is of the essence. If you're doing that, if you do that ahead of time, and now you said, hey, Mr. Jones, remember all those documents? Okay, this is what we're going to do. We're going to submit at 360, this, and this. You've already reviewed it. I'm going to send it over to you. I need you to sign it. Time becomes of the essence when it comes to especially, again, in this very competitive market. So have them review these documents. And by the way, once you have them review it the first time, and if that first deal doesn't go through, guess what? On the second time, it becomes even easier. They're ready just to, move forward. And sure, and again, excuse I know maybe a dramatic meme on this one, but I love the movie. But this one, really, what I'm trying to say is you want to have all this stuff so that you can easily pull the trigger, okay, on the offers that you're going to put in. Don't wait until after you show the property. Let's say you get someone that's an engineer, and if you guys know about disc profiling, you got different types of people. If you run into a C who's very cautious, they want to know, they want control, they want to know everything. You send them over a contract, you think they're going to sign it over because they're telling you how much they love it, but they take 2 days to review it. Get the stuff down, out of the way. Let them review it. Let them look at it so they know what they're getting into. Okay, and so that you can quickly pull the trigger whenever you have an offer that you want to submit in. Searching below your buyer's max budget price. Another good approach to take when purchasing a home. In this case, let's say, the person's, their max pre-approval or where they want to be, again, you did the baby steps, that number is $400,000. Maybe you want to take, start showing them properties $360,000 to $380,000. Okay. And the reason why you want to do this so that they have a little bit of, flexibility when they're, or give them a little wiggle room so that you can negotiate upwards. You can, provide, again, you got to make sure you understand their assets as well, but you have some room, okay, so that they're not exceeding that maximum amount that you're looking for, or that they're looking for rather. Again, just reiterating their cash reserves or their resources, how much. Okay, and again, before you put the offer, maybe look at different types of properties. How about looking for FSBOs? Now, many times when you show people properties, or people who list on, the for sale by owners, the most popular one is it goes on Zillow, and I think that they're FSBO site. But many of these the people that are putting they're lazy, or they're not aware of the multiple sites that they can offer their property, so they have less exposure. Keep in mind that they're showing their own homes. Okay, it gets very tiresome for them to do that. So these are great people to approach if it's if it's in an area that the buyer wants to buy. And it's much stressful. It's much more stressful for them to handle this. They're not used to. The guy's he works as an accountant, and he's not work. The guy comes and he works all day. They're not used to doing all the paperwork. So this could be even an opportunity for you, maybe even get a relationship. I know there's a lot of marketing strategies on how to get FSBOs. Coming soon listings. Okay. Check that out on the MLS. Those properties that are coming soon that fit your borrower's needs, they have them look at it, look at the videos or look at the pictures. Maybe this is a property that the minute it becomes available, you're ready again, pull the trigger on it, move quick on it. All right, so that's the first section, what to do. Now this one that I'm discussing, the second is what to do when you're submitting the offer, okay? And this is something I strongly believe, again, I want to reiterate, needs to do on every single offer that you put in. I think the last one is the ones that the last section I want to go over are other strategies that you can, pick or choose, use depending on your buyer's resources and what their needs and your, the approach you want to take. But one is call the listing agent before you write the offer. And I know you heard this one before, okay? I know you've heard this, but it's really important to reach out and find out what it is that the seller wants. What is important to the seller? Because by you becoming familiar with that is going to make your offer more custom to what their needs are. You're going to address it instead of just throwing out just random offer. Get to know what it is that they want. Maybe they want to close sooner. I mean, obviously, many want to close sooner. What I'm trying to emphasize is maybe it might even be later, okay? Maybe that's important to them. Your buyer's just like, I'm already closing 30 days. Maybe they want to close in 60 days. Maybe there's another property that they're looking to purchase and they're willing to take your offer, but they're saying, hey, you know what? I might need another 30 or 60 days to close. If your buyer is willing to do that, well, there's your advantage. Because that, again, as a listing agent, as a buyer's agent, your objective is to find these out. Okay, find these situations out that can make your offer that much more competitive. Okay. Once you do that, go through these items with the buyer, okay? Determine what unique benefits they are willing to offer in light of this feedback, all right? And when it comes to the unique benefits, these unique benefits, we're going to talk about this more. This is the third section where you can either provide them if you want, it's up to you. But we'll discuss this in later slides. But have that discussion with your buyer, okay? Have a buyer write a larger EMD. Very, very important. This demonstrates the buyer's commitment. Okay, the more the buyer's going to put out, it just shows that they're more than willing and their level of seriousness. Remind them, and I'm always surprised when I have this conversation and I'm going through the closing costs with the clients, and I tell them, okay, your closing costs, I'm just going to use the same number, as $30,000, and the appraisal gets deducted because you paid that up front. And I go through it with them, and I tell them that, oh, and you put a $5,000 deposit, that gets deducted. So you're going to only need about $24,000 in closing. They're like, really? I only need $24,000 for some reason that they think that is just on top of the closing costs that they need from the lender. See, they don't understand these things. So have that communication. Let them know. Let them know about that. Okay. So they feel more confident in putting the extra earnest money deposit.
Oh, I'm sorry, Joe. Can you
Uh,
just repeat that one more time again, slowly?
So what happens is if you tell someone, hey, listen, I mean, let's say you're the agent and you say, hey, Mr. Jones, Mr. and Mrs. Jones, I think you guys should leave a $5,000 deposit or maybe a $10,000 deposit. And they say, well, we don't have that much money, or you know what, let's say they agree with the $5,000 deposit. Okay. And then I'm having the conversation subsequent to that with them. And I'm going over their closing costs and I'm letting them know, Mr. Jones, Mr. and Mr. Congratulations on your $360,000 purchase. I go through everything. I show them that their total, what they need for funds to close is $30,000. That's total from soup to nuts. Okay. $30,000. And I reiterate to them, I say, listen, you need to pay the appraisal fee up front. You pay the home inspection. And then you also deduct the earnest money deposit. And I tell them, so when we go to closing 30 days from now and you get the keys in your hand, you're only going to need $24,000 because I'm going through the closing costs on my end. And they're surprised to know that they can read the $5,000 deposit gets deducted from my numbers as the lender. Okay. They think that that's $5,000 in addition to whatever the lender says that they need. So this, even though this may seem very basic and simple, but these are the things that I find when I'm very clear about this. And I even reiterate, even though they may know, but I reiterate it to them, it really goes a long way. They're like, oh yeah, that's right. That's great. Yeah, that makes sense. Does that make sense to you?
Yes, yes, yes. I just wanted to hear it one more time, only because to
Mhm.
make sure that I've been doing it correct, because I do it similar to you, but I actually think the way that you're saying it is even clearer, but
Mhm.
also because our new, well, I don't know how new it is, but if you use form simplicity, the way the as is contract for sale and purchase is set up, the template that our brokerage London Foster uses, once you put in purchase price and then you put in the escrow, the deposit amount, then it just jumps down to that line where it'll do an entire balance to close, which is exactly as you explain.
Mhm.
But before, depending on if you came from another brokerage or if you use Dot Loop or a different platform, we would split it out.
Mhm.
So we would do the earnest deposit, then we'd say the number total they're going to be putting down, or it's communicated, either via email or in conversation with the listing agent, saying, it's still going to be a total of 20% down, but they're going to put 5%. I do mostly
And you
condos.
know what? I can just tell by the way you articulate yourself and the way you explain this that you do this in detail and you do a good job explaining this to your client. I can't tell you too many
Yes.
people, and I'm not throwing I'm not throwing realtors under the bus. I see lenders dropping the balls, not setting the right expectations. I can't tell you how many people I see that don't do that. And by the time they get to me, they're
There's
surprised.
also another factor, Joe, which is that in the
They're surprised
contract,
when they see that I tell them that.
yeah,
So it's
there's another factor there, which is that in the contract, we don't talk about closing costs. In an as-is contract, we talk about the contract between the seller and the buyer. So we don't include those additional costs which you're talking about. So that is
No,
something that is,
no,
yeah,
the closing
but I
costs,
believe you do give them a
no, the
buyer's
closing
rate.
costs. Yeah, the closing cost is included on the purchase to sale contract because that's that line. I'd have to pull it up, but it's right on the first page. But
Yeah.
it actually says closing costs and type, and that's where you're putting the balance to close so that it's very clear. Because I actually just had an offer rejected 1 business day ago, just because the seller felt very unsure that my client was going to have all the funds necessary. That's why that page 1 is critical. And I was very excited to see that they sent out this training with you, Joe, because, you know, I tell my clients now all the time that I'm finding you the home, but to be honest, if you're financing, you need to be like this with your lender, and your lender and I need to be in sync just as much.
And you know what? I'm
And-
so glad you said that, because I really want to emphasize what you just said, because people are going looking at this and they say, I know that, or this is that because of the contractors. Here's the spirit of what I'm trying to say. The goal is it's a team effort, and especially if they're getting financing, whether you like the lender or not, they need to be your best friend. And I tell this to my clients: you might not like the sound of my voice or how I work, but I'm going to be your best friend up until the time you get your keys. So the goal, where I'm really emphasizing here is just saying it to them, and again, explaining and articulating it so that they understand and they digest that, so that you are not spinning your wheels by the time they get to, you know, they're within the contract and they want to pull out, or there's these issues that you're having.
Guys, I
It's
just
really what
looked
the
it
spirit
up.
of what I'm trying to say.
I just
Without
looked
trying
it
to get
up.
into all the, you know, the nitty gritty. But go ahead.
Guys, I just looked it up. Give me 1 second, because I just took an image of it. If you look at line number 40, it says balance to close, not including buyers, closing costs, prepaids, and proration. In other words, that isn't mentioned in the contract because that is in addition to the sales price. And that's why it's not mentioned. That is something that you need to have a separate conversation with your buyer.
No, right. I don't think that is on there, but at the same time, it is important to discuss, even the realtor, to discuss the closing costs with the buyer.
That's what my point is. That's all my point.
But besides that, I wanted to also try to help answer Bernie's question. Is that if you're making changes or adding things to the contract, you can also default at the bottom to put just the word balance.
Yep.
So, you know, you don't have to, it doesn't have to make, you know, equal like a specific exact amount. You can just put the word balance. So it's like putting owner of record on the seller side of a contract, just to make double sure, you know, you cover all your bases.
Right.
Bobby,
So
our form simplicity doesn't allow us to type balance. It's calculated off of the few lines above. It's like a straight calculation, because I actually called form simplicity last week. There isn't like
it doesn't allow that.
No, it doesn't.
Okay,
Yeah.
I was what I saw, and I was able to do it before, but maybe now. You called it form simplicity, and they confirmed that.
Yeah, it's a calculation. Like that line is definitively a calculation. What they did say could be like one workaround is when you actually start a session, then in a markup,
there you go.
You could do something, but I think it's also going to depend on the listing agent, because I know that the person that I was working with wanted to see it laid out a certain way, which we kind of know. But one of the things I'm just now telling people, like, and I had to tell a client this morning, it's very 10 years ago to go find the house first, then get your financing. In this type of market, you do not have that time.
Exactly.
You need financing, and no good realtor is taking you to even show you a home without a pre-approval. It doesn't make sense, because you don't really know what house you have. And to be honest, these calculators online are cute. They give you only a directional sense until the lender runs everything and sees what your true worthiness is, your true cash, sees your patterns. There's like a whole algorithm, I think, in how your systems assess the risk of a person. That's not something we can guess unless you get yourself running process. And I'm not doing a showing without it.
Yeah, and you know what? You just reminded me about this too. Many agents, what they'll do is because look, we all want leads, and the minute you get a deal and you know they want to put an offer in, and they've already said that they're pre-approved, guess what you do? You go and you move forward on putting an offer. But I believe that it again behooves the agent to reach out to that lender, especially if you don't know them. Have that real have that conversation with them so that you can work with them as a team to set these expectations and make sure that they've all been met and that no, there's not going to be any surprises. So,
And Bernie,
Listen, to add to what Bernie just said, Bernie, what you just said is genius, because that is exactly what separates a realtor from a glorified shower. If the client isn't your client, if the client hasn't signed a buyer broker agreement, if the client hasn't been pre-qualified or has a DU, if the client is not wanting to run their credit, if the client doesn't want to share their financial information, if the client is withholding that they're about to get a divorce and they're in a legal separation, why are you getting dressed and going out and working and showing this person when you know you're not going to close them? What you just said is absolutely genius, because you know what? It is what separates a glorified shower. I could hire an assistant who's a realtor and tell them, listen, these are your 27 appointments for the day. Go. There's a reason why I don't do that. It's because there's a reason why they go out with me, and it's the expertise and it's the knowledge, and it's because you are the liaisons and you are the influencer. And if you don't have a client that's ready, willing, and able, and you take them to a beautiful house in Miami Shores, and then they come back to you 6 months later and say, okay, now I'm ready. That house is gone.
yeah.
In this market, the houses aren't lasting a month.
it was on a week ago. Yeah.
Exactly.
It is what it is.
I just have
So
to
yeah,
say,
you got it, my
yeah,
friend.
really
You're on the money, 100%.
Right. The other thing that I got to say that she said, she put it perfectly, was that you have to be in sync with the mortgage broker. And you should tell your customers that from day one. I've seen deals where they haven't talked to the mortgage broker, of course, until the issues start to come up. When? 3 days before closing, 1 week before closing. So let them know that should be standard in your discussion.
Yes, and another standard I've added is I also stress to them, particularly with condos, because we have a lot of people coming here from another state who have relationships elsewhere.
Right.
That doesn't translate, particularly with the property type of a condo, and how important it is, the relationship. So I tell them, I have a list of lenders so you can pick. I'm not going to push you to one. Some people ask me to pick. But I explained to them, the reason why you want to use someone I know isn't because I get any sort of kickback, because that is illegal. But it's really because you need us as a team. There are lots of files being processed, and relations and a lender that I constantly send referrals to is just at least going to prioritize you. We've worked together before, so that means we have a good working relationship, which only helps you. And then they also understand, every agent is very different. So I'm ever so slightly type A. So, the lenders I work with kind of know that, like, I it's just my thing to try to dot I's and, cross T's at the same time.
That's Bernie's file. Let me take care of that.
Exactly. And it becomes really important.
Yeah.
So helpful horror story. I just and I was actually on the phone with Bobby about this. Bobby, that offer ended up getting rejected, which I was not completely surprised by. The buyer was intent on using a lender from out of state. And it is the first thing that the seller's agent said, where is this lender from? And sometimes people feel, it's a lot for them at one time, especially if they're relocating here from like another state, because it's like, who can they trust? So first you get them through the exclusive buyer agreement, right? But now you got to introduce them to someone else, and it can be a lot at the same time. But long and short of it is, I did exactly as you said, Joe. I reached out to that lender, and to this moment, it has been 4 or 5 months. I am yet to get her on the phone. It was very hard for this person for some reason to respond to emails, and was very delayed in timing. And I just kind of kept ceding along the way to my client, we're missing months. Lenders are very busy right now. So pre-approvals are not taking necessarily a couple days like they used to, but they should not be more than 2 weeks. And fast forward, this lender did a pre-approval of 15%, which was such a red flag for a condo. Condos, I mean, maybe old condos, dilapidated, blah, 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 will accept 10 or 15. But if you're going to a newer building, anything constructed post 2008, 20% looks, anything under 20% is suspect. This lender wasn't from here. And then when I communicated there were no reserves for the next 3 business days to this moment, the lender never called the building to understand what that would translate to for the client. And then eventually I got the client over to a local lender. And then it was a shock of they have to put down 25%, which is our standard. But you need local eyes on the ground with the relationships, the understanding.
Exactly.
And what happens is the buyer has been conditioned to think, oh, I'm going to buy with 15% down on a condo because they already went through this journey with another lender, with their existing lender, and a realtor who was wet behind the ears, and to find out, maybe you got the deal after, So again, all this that we're discussing is really setting expectations, letting them know what to expect, being proactive, addressing these things up front. And Bernie, you've articulated that very well. So I know that I can just tell by the way you speak, you do a fantastic job doing these things with your buyers. And the biggest thing is having that, and you said this, having that relationship with your lender, because 2 minds are better than 1. And when you're working in tandem and and they're hearing the same thing from both professionals that they're working with, it instills confidence, and they know, even if they have to bite the bullet and they have to know, oh man, well, okay, I'm willing to pay the extra $5,000 or whatever it is, but it's going to help you close more deals by doing that. So.
Yes, and it's sometimes it's just such a hard lesson to hear, because I would rather do it up front. I try to condition them out of the notion, those old notions of the buyer's actually not the boss. If you are financing, the lender is the boss, because they're providing you the money. And I constantly say that, so they're very clear on, you have to hand in documents. Like, this is not, whether or not someone thinks you're cute, and you need to be in tandem with that up front, because in this market, just putting in an offer, we could be looking at the wrong thing. Like, people think in their mind, they see what they want to buy, but that's not what you're approved for.
And at the end of the day, what it all boils down to, if you really want to peel back the onion and get to the uncomfortable truth, and look, I'm no different. It happens to me from time to time. You get on a client, we all want to close deals, and we get on the phone with someone who talks a good game, and we think, oh my gosh, I don't want to lose this lead by questioning them. I'm learning, which is hard, I'd much rather lose a deal to someone if they're not hearing what they want to hear, but if I can communicate to them exactly what they need to hear and deliver that and get great on that pitch, that they're going to go out and hear this or that. But you talk about your experience, talk about the team you work with, and how that's going to ensure that they close. So these things are, again, just priceless to do as you went through this transaction. And just for the sake of time, I want to get right back on so we can move forward, because especially about speaking about earnest money deposits. One of the things about earnest money deposits, guys, is the average earnest money deposit that agents are putting down is anywhere from about 1% to 2%, believe it or not. Okay, so one of the things you want to do is, obviously, the higher the better. Even by doubling it to 4% of the sale price is going to double your chances, or again, strengthen that offer 3 times, maybe even 4 times. Okay, so if you give 8%, now again, 8% usually, again, is a good rule of thumb of the total. If they're going through a first-time homebuyer program, single family, not condo, if they're going through a single family, or not a lot of times condo, very few times, but when you're buying a single family, it's usually about 8% of the sale price. So if you're putting in a 6% earnest money deposit, that's a very strong offer. I want to say one other thing. Remind the client, even if you gave them your total closing cost was $30,000, and if the client, and again, I'm not saying for you to do this, but if a client did and had the resource and really wanted the property, they wanted to give $40,000, remind them they'll get that other $10,000 back, at closing, because that's an excess, that's exceeding the closing costs that they need. So earnest money deposits, again, provides confidence to the seller that the deal's going to go through. All right, they know you're not going to walk away if you change your mind. And we've all had that experience where people actually change their mind at the last minute. Next thing, have your buyer write a personalized letter to the seller. Okay. Now, this one is, I got to tell you, one that, let me just talk to you as far as a lender. I don't get letters too often. Once in a while, surprisingly, I actually do. And I got to tell you something. When I get a letter, and when I'm talking about a letter, I'm talking about an email. And it's just not an email. Hey, Joe, I was recommended by blah, blah, blah. I'm trying to get pre-approved. Can you help me or call me? But sometimes I get that letter where they actually tell me a little bit about them. And they explain to me who they are and what they're looking to do. And I got to be honest with you, just on a very human level, I deal with lots of people who want to get pre-approved. But whenever I get that type of person, they stick out of my mind. I bring it up to my team or, to Evie if she's helping me. And I let them know. And for some reason, it just goes a long way. Okay. So make sure that they write a personal letter whenever you're submitting the offer. The bottom line, what we're trying to do is make a personal connection with the seller. Okay.
Joe, I actually don't let them write it. I write the narrative for all my offers. Because I feel like they're in such an interesting emotional state, to be honest, and have so much going on. And I feel like because I have the purview of having gotten to know them, but then, with showings, especially when they're more interested.
So you actually write the letter for them and you submit on behalf of them.
Yes, and I do it for rentals. I do it for rentals.
Rentals,
and sales.
Great. My daughter, Griselle, who does a very good job. I think in fact she even won an award. I reached out to her for some pointers, and she told me that. And I got to tell you, the first deal my daughter put in, she was renting a place in West Palm Beach. She got it. She got the deal, and it was because of that advice. And you know what? Each person, look, I want everybody to know when you're hearing this. Take how you can internalize this, and then what is your style, okay? Whether you write the letter or the buyer writes the letter, please, by all means, this is just resources for you to take so that you have a different approach and can understand some ways to really be able to make to stand out when you're putting in an offer, because that's really what our goal is, to stand out. How can you be top of mind, okay? One of the things is that you'll hear about, some people say it's controversial because of fair housing. Here's the thing you want to be careful of. Make sure you're not talking about race or disabilities or anything like that, just so that you can avoid that. You want it to be about the property. You want to honor the seller. And I'm actually going to show that to you on the next slide, okay? When doing this, here's a really good format to follow, okay? You can do this, and I'm sure, Bernie, you probably do this when you do it yourself for the seller. My recommendation, again, everybody's different, and I don't necessarily think there's anything right or wrong, but I think one of the most important things when you do it, first address the seller by the name, okay, by their first name. Show gratitude. Say something like, "Hey, I really appreciate that we had the ability to come see your place. We're grateful for that." Compliment them on the property. Say, I love the addition that you made. It's beautiful. Talk to them about the property because people who are selling their home are very emotional and they put a lot of sweat and tears. Lord knows, when I sold my last home and I thought I'd never sell the home, I myself actually did all the build out and I put a lot of time into it. And that's the one thing that really, really I missed, is that kitchen that I did. So people appreciate that when you're actually complimenting them on that and you're bringing that up, how much you appreciate that. Why this home is perfect for you. Maybe that addition is the perfect home, that you were in a 2-bedroom. Now you need a 3rd bedroom for your child. And that's it's now that your family size is growing, it's a perfect home for them to be in. And then end it. Make sure you end it with gratitude by stating, you know, again, thank you. And, you know, if we're so blessed, again, I'm just using this as an example off the top of my head. We're so blessed to be able to get in your home. We would be so grateful if we could have this offer accepted, if we could be able to purchase this beautiful home of yours. So here, just a quick little format, take it, leave it, adjust it the way you want. But I think it really goes a long way. And here's another thing. If the buyer, once you do this on the initial form, or let's say the initial offer doesn't go through, your client, or in Bernie's case, the one that she's written, I'm sure she has a great format that she uses. You can just rinse and repeat on the next one, just customize it based on the property. So it'll be easier for you to do that on the next deal, okay? Next one, always include an offer checklist. Now, this is, again, something I do in my business, and I'm going to explain to you how. How nice would it be when you're going, so we all know that the agents are getting 22, 30, in some cases, 30 offers on properties. The listing agent has to physically go through and look at all these items, and, you know, and you know, as they're going through, are they going to remember everything? Are they going to have it off the top of their head? I don't know. But having a nice checklist just gives you all the bullet points of what your offer is, and especially highlights some of the maybe the unique benefits that you're looking to provide. So again, this allows you to stand out. All right. It makes it real easy for the underwriter. I'm talking about the lender. It makes it real easy for the listing agent. Let me tell you what I do whenever, you know, as a lender. One of the things I've learned real early on in this business is when you submit a deal with a client, my job as a lender, and I always tell my buyers is, you got to tell me the good, the bad, and the ugly. I'm like your attorney. I'm no different than a good attorney. I need to know these things so that when I put everything together, when I'm putting in front of the underwriter, who's the judge, I want them to approve your loan with no problem. So when I'm putting a deal together, one of the things I learned to do really early in this career is to make it clean, to make it simple, to make it easy for the underwriter. Because the underwriter, you don't know, the underwriter got in an argument with her husband. She's having a bad day. Now she's looking for the property, and I mean, she's going through the deal, and I mean, she's going through your loan application. It's sloppy. It's not detailed. She has to look through everything, and then she just puts it to the side. You know, listing, we're all humans. We all act in the same format. We act in the same fashion. So try to make it real simple. And I've learned to do that. And it's really funny how I see so many lenders who actually are even, you know, other branches and loan officers that I've worked with through the years who haven't done that. And they always get beat up on conditions. You know, the key is when you're submitting a deal, the feedback we get, if we know it's a good deal, is when we get the approval, we have one, maybe two conditions, okay? There's some people, and I talk to underwriters, they say, yeah, every single time there's like 12, 14, 15 conditions because, you know, they don't submit a clean deal. So all these things are really important. I'm just going to reemphasize, it highlights the offers and it makes it super easy for them to review. They don't have to go through the whole contract. They're just seeing all the bullet points of everything that is important and necessary for the seller to make a decision.
Real quick, I'm sorry. There was a couple of questions that I wanted to get to real quick. Yvette Alcoba is asking, what percentage are the closing costs of the seller? That I don't know if you covered that. Did you cover like
what is a percentage?
What is the I'm guessing she's asking what is the like estimate of the seller's closing costs?
I don't know. Maybe you can tell me, Bob.
Yeah, the closing cost for the seller is pretty simple. It's
real simple. Yeah, it's nothing like the buyers.
Yeah, it's different than the buyers. It's usually a little bit less than the buyers, and I like to go on, well, maybe 1.5%, because it's 0.007% for the tax on the deed. And then there's some title costs and some other costs, miscellaneous costs. So you could estimate around that to be cost for the seller. Now that's only the basic cost. That's not including if there's a FERPTA that they have to withhold, or if there's anything else that they have to withhold, or liens or anything, or violations. But just the basic that you have to pay is the 0.007. That's almost 1% for the tax on the deed. And
So it's 1% plus the 6% that they have to pay to the realtor. So 7, maybe
Right,
other
right.
miscellaneous. So maybe 8% on their end altogether.
I'm talking separate than the commission. Just specifics, okay? Yeah, because of course, you're right. Everyone knows the commission, but yeah, it's whatever the commission is plus 0.007, so almost 1% for the tax on the deed, and any other miscellaneous costs you want to probably add 0.5%. So I usually say, you know, about the commission plus another 1.5% or 1.25%.
Yeah. So when I'm
Bobby,
Mhm.
so Bobby, quick question. Since this is a buyer training, I always tell my clients, really an estimate of closing costs needs to come from your lender, but as a back of the envelope, you know, anywhere from 2 to maybe 2.5%. Does that sound accurate?
You mean for a seller or for a buyer?
No, for the buyer closing costs.
You say 2 to 5%?
No, 2 to 2.5. I'm sorry, 2 to 2.5% for closing costs for the buyer.
Okay, is that inclusive of the lender fees, and or are you're just saying a cash transaction?
No, that's no financing contraction inclusive of the lender fees.
Right.
No, I wouldn't say that, because you don't know what the lender's charging in points or underwriting fees or anything like that. So that's why I try to just say, okay, well, this is just the basic cost. So as a buyer, I would have one as a cash deal and one as a including a regular type of mortgage.
Okay.
And you know what? In your example, I'm sorry, who's speaking? Who's that?
Oh, it was Bernie that asked the question.
I'm sorry, Bernie. Bernie, in your example, when you give them that, what is the down payment in that example that you're giving for that client, for your buyer?
Oh, the down payment is not included in that number. It's not a balance to close. It's
Okay.
like closing costs.
Right.
And yeah, that would be separate. I mean, generally 20% is the right average. Of course, I let them know, you know, you could end up picking a building where they require less. But again, with newer construction condos, especially if there's a no reserve situation, you could easily be asked for an extra 5 or 10% down.
Yeah, and you know what? I'll just answer that. I'll tell you, if you're just talking about closing costs, you're right. It's probably between, well, actually, I'm a little bit close. It would be more so 2.5 to about 5%. Okay, and that's a range. There's some situations where that closing costs might only equate to 3%. Okay, sometimes it might be 4%. The reason when I
want to have two, one for a cash transaction, one for a loan, because you don't want to scare your cash buyers away.
Yeah, exactly.
With a loan, you know, they might just all of a sudden think.
Right, and you know what? You're absolutely. I should preference that, but when I'm saying closing costs as a lender standpoint, when it comes to someone getting a loan, you're right. Maybe if it's a cash transaction, it's maybe as Bernie said, maybe as low as 2%. In some cases, you know, depending if they're paying the title and stuff like that. So when I use my number, I'm always thinking about what the buyer's point of view is and how much they need to put out total. And I always use a rule of thumb. If you're going through a first-time homebuyer program, whereas, and I don't want to segue too much off, but if they're going through a first-time homebuyer program and they're putting minimum down, whether it's 3%, 3.5%, or 5%, typically the rule of thumb I tell them is anywhere from 8 to 10%. Now, that's just a rule of thumb that they know that's how much money that they'll need. Okay, but on a closing cost, yeah, I would say if it's a cash transaction, anywhere from maybe 2 to 5, 2 to 2.5, maybe. If they're getting financing, 2 to about 5%, or 2.5 to about 5%.
Okay, and then there's the last question is, Can you repeat, for every $10,000 of asking price, how much would the monthly payment be? I think the answer was $50. Right?
$50, yeah. So it's a real quick rule of thumb. Okay.
Jamila asked that question.
Yeah. So Jamila, if you're ever out there and your client, you know, they're qualified for 250, or let's use my example of 360, but you know they can go up to 370 or 380 or even 400, and they're stuck on that $2,400 payment. They don't want to go anything above that. If they say, well, how much is it if I do go from 360 to 380? Let them know it's $100. Okay, $100 difference, $50 for every 10,000. Okay. So going back to this offer checklist, I kind of skipped over this, and I want to kind of go back to when I submit an offer. When I submit an offer, I many times, especially when I was submitting a deal to different investors, this is exactly what we do. We put a checklist of exactly just the bullet points of the client, and especially if I have to give them a little narrative of something, so that when they get to something that might seem a little bit, you know, questionable, if they're reading and they know that there's a narrative on there, they're not going to go and over condition my items. They're just going to say, oh, okay, no, I already understand this. Now I see the 30,000 foot view. You know, I get it. So listing agents, they're not underwriters, but they're basically working in the same capacity. They're looking at a lot of stuff and they're trying to make a decision. Plus they're relaying that to the seller. So it's really important to itemize these things. I know when I read a book, I know, I like to, before I read the book, I like to at least look at the table of contents to see what I'm going to be going and what it's going to be covering. You know, just go over like the broad strokes just to see what I'm going to read. So lenders, underwriters like to see that, and I know your listing agent or your listing agents will appreciate that as well. So you let them know, like the personal property, the price, all these things. You see it right here on the presentation. It also illuminates the parts, the important parts, so they don't get missed out. Okay, especially if you're going to do, provide some unique, benefits to the seller, which again, we'll talk more about that. All right. Hey, listen, the listing agents may also forward that to right. They may be so impressed with that, and it simplifies. And again, our job is to make the listing agent's job easy, right? If you do that, they're gonna like working with you. So if you have that, they'll just forward that right over to the seller themselves, and maybe they'll really be impressed. Not maybe, they will be impressed. Submit your deal ASAP, preferably the same day. Okay. Have your buyer already review all the paperwork. So if you've already had your buyer already review all the paperwork, it's going to be much, much easier for you to go ahead and just fire off that deal that day, not wait 2, 3, 4 days later when other deals are coming in and other deals are standing out in the listing agent's mind. Do before the weekend. This is something I heard that many people like to do, because on the weekend, that's when everybody comes in and starts submitting offers. So if you can't, that may not work out, smart agents are probably going to wait until the weekend. But hey, if you can, and you got the skills and you can negotiate, try to get it done, try to get it locked up. Ask for a quick, offer acceptance deadline. Okay. I'm going to try to go pretty quick here because I know we're already an hour and a half, and my goal is always to make these within an hour, but sometimes when I guess when there's a lot of content and lots to discuss, it's tough. Here's a great strategy. Have your lender call the listing agent. How about that? Most of the deals that I get, most of the deals in general, this is what happens. Listing agents, they call the lender after they went through 10, let's say they get 10 offers and they like the 1 or 2. Those 1 or 2 offers that they like and they're kind of on the fence, those are the ones they're calling. Okay. So how about be a little proactive and have your lender call before they review any of the offers, or they, just have them call, have the lender, hey, listen, it's Joe Mahallati. I represent Mr. Jones. Just want to introduce myself. You got this offer on so-and-so street. Just want to kind of give you some, some broad strokes on this deal. Just want to let you know. And you go into it, have a nice little pitch, But when the lender does that, it's being proactive. It's making listing agent like, wow, this, it's gonna stand out. It's gonna just be top of mind. It's really going to impact the agent when they're hearing that before they've called the agent. And I tell you, I tell my agents that anytime you want me to reach out to them, just say the word and I'll do it. And surprisingly, very few agents, take me up on that offer. But I'm always for being proactive, and I think that goes a long way. Demonstrates to the buyers, it demonstrates the buyers are working with a proactive and a professional team. Okay, so, and it further ensures the deal is going to close without any hitches. If the lender's already saying, hey, look, I got this client, not only are they pre-approved, but it's not a pre-qual. I got all their documentations. You sign, the minute you execute the deal, we're ready to get this thing into underwriting. You know how far that will go if they hear that from the lender? And in addition to that, what if you have your lender send a video? Imagine that. Have them send a video, a quick little Zoom presentation showing them about the financial strength, just going over the broad strokes of the pre-approval, the same way you would do on a phone call, but you're just doing it in a video format. Discuss the loan pre-approval, all right, the type of loan, go over, bring up the fact that you have the DU approval. Of course, you have to redact some information, I do, but you can go over and actually show it to them that they have the DU approval, which means DU, by the way, any of you guys are hearing DU finding approval. Let me explain to you what that is. That stands for Desktop Underwriter. It's a standard automating underwriting system that all lenders use, okay? It's a standard system. And we have to, when we pre-approve, not pre-qual, when we pre-approve, we submit it in. It's the same systems that our actual underwriters use to underwrite and finalize and issue a loan commitment. We use the same system, no different, okay? So when you want to show them the DU approval, because now they know, well, you can run it and get it through DU, but combined with the fact that you let them know that I got all their documents, which I've confirmed, and I ran it through DU and got the approval, they know this is a deal that's going to close. They know this is not something that, oh my gosh, I got this document and found out they don't have enough funds. You see what I mean?
Yes, Joe, can you just address why? So like in my more recent situation, that lender wasn't here and had written back that could not do a DU because it's against compliance. And while I have heard that, it's a more of a standard practice here in Miami.
It's so funny.
Especially
it's so funny.
since
You know what? That's funny you say that, because I also do work in PA in New Jersey, and you're absolutely right. I never ever get that in the PA market, but here it's something they do, and as long as you're not detailing any information, you do got to be careful with it. They haven't passed any rules regarding that. You cannot show borrow Social Security, things like that. So it is something that this market does. And, if you're trying to be proactive and and this is what you're providing to try to seal the deal and garner confidence, I don't see anything wrong with it. Are you saying you come across lenders that say they don't want to do it?
Yes, but this one was out of state. Local people do, which is one of the reasons why I told my client you have to move to a local vendor. And then I also wanted to double check with you, is this right? So once we've honed on what we think is going to be the property or the property they want to put an offer in, it can be either of those two. I will run the address by the lender just to see by chance if they've done any closing or, more importantly, condo review in the last 60 to 90 days. I mean, if they haven't, sometimes they just haven't, but sometimes I feel like it helps. So I wanted to cross-check that makes sense. And then once we actually are doing the offer, I actually will send the lender the MLS so they can see certain descriptions. And then I send the client the tax roll as well. And I just double check for myself in case that's something we need to address with taxes unpaid.
Mm-hmm. Yeah, yeah. No, that's great, especially when it comes to condos. That's a good point. In fact, guys, for those of you watching this, we did a training on condos, and it discusses some of these things that you can do to, again, be proactive, get ahead of the deals, secure your deal, steps that you can take, and getting the condo questionnaire. So you might want to look at that. I thought it was a pretty, Bobby, you were on that, right? You know, I had actually one of my condo reps on that, and she gave in her feedback as well. So that's really important to do these things up front. But yeah, that is important to get these things up front, and along with the more the better. I always say the more the better. More documents we can get in, the more that we can get done. It's just going to make the deal go so much smoother. So having your lender send the video, doesn't have to be a long video, 30, 60 seconds. Again, you're doing basically this. Tell your lender, do the same thing when you make the call. This is what I do. Whatever I'm saying on the call, I'm doing on the screen, just showing it to them. Okay, real quick. But it goes a long way. And they will send that to the listing agent may very well even send that to the seller as well. And I'm sure they'll be amazed. Next, present your offer through video. This is you now that I'm talking about, okay? Why don't you, and many times, there's a saying that a lot of people, and I say this as well, it's better if you can do it in person, meet the person. But in today's environment, it's a little bit tougher. Plus, you're working, I'm sure you want to work more efficiently. If you have the opportunity, I'm a huge fan of doing it in person if you can. But the next best thing is presenting it through video, okay? It's one of the most effective modalities of communication, okay? It's one thing just to look at something on an email or, a pre-approval or whatever the offer is, but when you're actually talking, we've all experienced it. When we're on a Zoom meeting, you still, if this was just a voicemail and you were just listening to my voice and hearing everything, yeah, you'd get some good takeaways, but maybe you wouldn't be so engaged. When it's on video, it's, you connect with the person. And that's, again, what the goal is, to try to connect, all right? Demonstrates your effort, shows that how proactive you are, okay? Go through the highlights of your offer. You want to make sure, even though that checklist will help you and it will go a long way in showing that they understand those highlights of your offer, but you're reiterating it again on the video, and and they're hearing you say that, they see you saying that, okay? The listing agents will be amazed, and they'll also forward that to your seller, okay? This will definitely, I'm sure, really impress upon both agent and seller, or agent and agent and seller, that is. Okay, now Bobby, time check. It is 11:40, and I know, and again, I'm a big fan of trying to be quick. I don't know if you want me to go through this other section. It'll probably be at least another thing. As I go through it real quick, do you want me to do this maybe on another training, or do you want me to just try to go through it really quick, just for the sake of time? Because I know you said you want to keep this under a certain time.
Yeah. How much longer do you think it'll take?
Maybe another 15, 20 minutes. So I don't know if you want to get a poll or if you want to make the judgment call. I just want to make you tell me.
You can go ahead and
all right, I'll tell you what, I'll go through it quick, and if we need to spend more time, what we'll do is I'll go through this, guys, again, just for everybody's. I want to really respect everybody's time, because I really appreciate, especially on a Monday, it's already been an hour and 40 minutes. I want to go through the rest of the stuff. How about we leave questions if we have extra time, or you can always reach out to me if it's more real estate related. You can obviously go reach out to Bobby, Memo, go on to the chat as well, which is very resourceful. Any of you guys who are not on that chat, I tell you, Memo does a great job, man. He's like just a resource of information, along with William, all the agents. I learned a lot of real estate just by watching the chat. So you might want to go on there as well. So I'm just going to try to go through these pretty quick at this point. Again, just want to respect everybody's time. So again, these are ones, take it or leave it, guys. Okay. This is just ideas you can do that may give you the advantage. And that's really what this part is all about, where you can maybe provide unique benefits to the seller. Okay. So bring your home inspector to the showing. Basically, if they do that, it will put their buyer at ease, determine there are no major issues. You can just have them come while they're looking at the property. If they've already seen the videos, they think this is a property they really like, maybe they might want to bring the home inspector. They're not going to go to do the whole detailed inspection, or maybe even their contractor, but at least they'll go through it enough to take that edge off them so they're not super, worried about it. And maybe it'll get them to the point where they'll potentially waive the inspection. Keep in mind, guys, this is not something you want to do if the property is tore up from the floor up. And I'm joking when I say that, but if there's issues or with your experience that this needs a much deeper inspection. So, take this, this needs to be a judgment call on your end. But again, this could be a good strategy. Next one, offer free occupancy. Okay. Offering free occupancy. What is that? Well, one of the things you need to know is whenever you make your first mortgage payment. So let's just say we all close today. What's today? The 10th, right? We close today. If you went to closing today, got financing, your next mortgage payment is always going to be 2 months after, whether you close on the 1st or the 30th. So if you close today in May, you don't have to make a May mortgage payment. You don't have to make a June mortgage payment. You pay July. So if your buyer knows that, they may be willing to provide some, just a free occupancy to the seller, where if maybe they're under pressure and they could get an extra 2 weeks, just 2 weeks to stay in there before they move out, or deal with whatever issues, get stuff into storage, or maybe they're closing, that might seal the deal. Okay. Lessens the stress to the seller, obviously. Next one, write an escalation clause into your offer. Okay. Escalation clause virtually guarantees your buyer with the highest offer with proof of.
That's a really good option right there. Eve did that contract last month, and she got she got it under contract. By the way,
basically, what is it? Escalation clause is basically saying that you will offer maybe $500, $1,000 over and above whatever highest offer that was submitted in. So if you talk to a listing agent and you're like, I already got 5 offers, you relay that to your client. You're like, look, they got already 5 offers. Do you want to, put in what the list price is, or do you want to put in an escalation clause where you will, whatever the highest offer is, you can provide $500 above that, or $1,000, whatever that number is.
Bobby and Joe, is that an addenda for the escalation clause, or is it line 571?
Bobby, you tell me that. I don't know that question. I don't know the answer. Hello, Bobby? Bobby might have taken a call. I'm not sure about that, but we'll get back to you on that. Okay, Bernie?
Thank you.
Yeah, no problem. So, if they're willing to go up, they may say, I'll go up to, if my offer is 360, I'll go up to the escalation clause with a cap of, let's say, 370. Okay. So you can put a cap on there as well. All right. And again, the nice thing is you'll get proof. They have to show proof of that highest offer. So let's say you end up getting it at 370, and if it's right about at where your client wants, they have to show that the offer, their last offer, or their highest offer was at let's say it came in at 368 or 369. I'm just reiterating that. Let me just move on. Waive appraisal contingency.
Joe, if I could answer that question about the additional terms. Bernie, when you're doing an offer like that, where you're something extraordinary outside of the contract, like offering that $1,000, you want to do that as an addendum. You never want to put it in the additional notes. The additional notes has to do with closing any jobs, with the transaction fee, you know, things that are simplified. But if it's something that's additional, you want to make sure that it's a signed addenda, because, well, for a couple of reasons. First of all, because you want to call attention to it. You know, it's a good negotiating tool. But second of all, because not everything that the buyer and seller look at needs to be looked at by everybody else.
Okay. So the next one, guys, is waive the appraisal contingency. Okay. Basically, this is a situation where you're willing to.
Can you guys silence Bernie's phone, please?
Okay. Next one is waive the appraisal contingency. So this is where, and the way you would write something like this would be to appraise at or above $345,000 with a $360,000 offer. What you're doing is you're putting in the offer at 360, okay, and you're saying, listen, we're going to pay the 360, and even if the value comes in at 350 or 345, your client is still willing to buy it, which means they have to pay that difference. They have to pay that $15,000 difference above the appraised value, okay? So, but if it comes in at 340 and your client's threshold is at $15,000, like they say, hey, you know, Memo, I'll pay 10,000, I'll pay 5,000 above, I'll pay 10, I'll even go as high as paying 15,000 above my price. But I'm not going to pay 20,000 above. I don't want to pay any more than 15,000 above my whatever that value is. This is a great approach, okay? And this is how you would word it on the addendum, all right? Make sure the offer isn't too high above the value if they're getting a mortgage, okay? So you want to be careful. You don't want to, you know, and that's why this clause is really great. But if you're trying to put in an offer, you don't want to put it, if let's just say your client's, you know, at 360 and you know that they can go to 380, all right? But the value might not come in and they can't pay that extra amount, or I'm sorry, rather you go 380, the seller might take a deal that's 370 because there's no contingency clause. And they might take the deal that's 370 because they don't even feel that you're going to get the financing for 380, especially if you don't have the money to pay the difference. Okay, so be just conscientious of that as well. And here's, again, I'm just saying, you know, make sure even if you're doing this, you're relaying to the agent that the borrower does have the sufficient funds to pay that additional amount. Let seller choose vendors. You know, this is just like, you know, whether or not they want to choose a title company, the termite, whatever other inspection companies. This is just, again, just little benefits you can offer or you can provide to the seller to be, you know, to stand out, to be unique. Offer to pay seller fees. This is kind of creative. How about this? Offer to pay for maybe their real estate, their side of the real estate transfer tax, title fees, moving costs, their property taxes. Again, at the end of the day, it's just anything that's not going to lower the seller's bottom line and is going to help them, okay? Basically provide more money in their pocket. Don't ask for closing cost assistance. Now, I know this sounds pretty obvious, but you know, it's really setting expectations with the client who their cousin who bought a property 4 years ago and got a seller assistant and all this other stuff. You need to let them know in this market, you're not, you know, it's going to be very tough. You'll try, but if you know it's in an area where, you know, prices are, you know, they're bidding wars, you're not going to be able to provide that. And also, it helps you. Remember, I told you this is a time management as much as it is education on how to get good strategies. You don't want to waste your time on a client that needs to have seller assistance. You know, don't get me wrong. You spend time with your client, educating them, letting them know, but not getting them in your car and showing them properties that they need seller assistance if they don't have enough funds. Okay.
Quick question, Bobby. I've had a buyer prospect ask if the lender or I would do a credit at closing. I just want to reconfirm we're like no discount brokerage, right? So basically, they wanted me to give them $3,000 to $4,000 commission, $3,000 to $4,000 from my commission back at closing. I know that's always my choice, but I just wanted to confirm from a lending side for you, Joe, and from you, Bobby, like as a brokerage, we don't discount in that way.
Bobby. Yeah, I'm sorry. I'm sorry, Bernie, when you say discount, I don't know, Memo, can you answer that?
I think it's because they heard from their brother and sister-in-law where they are in a smaller city like Melbourne or somewhere in Florida, that agent had given them a discount. So I think that's why they're saying it in that way.
Actually, quite the opposite. It was, I don't know if that's Bernie. I can't see. I'm not wearing my glasses. Quite the opposite. At London Foster, all you have to pay your broker is your transaction fee. Whatever is left after that of your 3%, if you want to give it back to the seller, give it back to the buyer in portion, in whole, it's up to you. We don't deter you from doing that. Obviously, as a professional, I'll tell you that you don't need to do that in order to close a transaction. But for instance, let's say your buyer is your mom, and you don't want to make money off of her. You want to give her, everything but the $794 that you're charged by your broker back to your mom at closing. You can absolutely do that. All you need to do is 2 days before the closing, go into londonfoster.net under my deals and go to buyer credit. You're gonna have to fill out a small form, and then Bobby will send you in turn a letter to the title company saying, as long as we get our money, whatever Bernie does with her commission is up to her.
Okay, thanks, Memo. Next
You're very
one.
welcome.
Offers shorter due diligence period. So this might be like your home inspection, if it's usually 10, 14 days, making it shorter. Again, it just makes the seller know that you're going to move quickly on this deal. Close ASAP. Again, I know another obvious one, but why even more important to make sure your borrowers are getting in all their documents, so that you can, again, the minute they go under contract, your lender can pull the trigger and get it immediately disclosed, get the loan into underwriting, and get moving quickly. There's some situations where you're not able to, but again, have that communication. You're working with your team. I always tell my realtors that I work with, I want you to look at me as an extension of your office. I'm here. I'm the finance guy. I'm here to help you close this deal. Okay, so that's why communication is absolutely key. Next one, don't put in low offers. I know this seems very obvious again, but this is more so, just not wasting your time, especially, educating your clients, letting them know. Many of them think that if they do put in a low offer, they're expecting that they're going to get a counter. You got to tell them you're not going to get a counter. As many times as these agents, the minute they got 20 of them, the 10 that are below asking, they don't even look at them. They're just going to look at the ones that are higher. So again, just letting them know that. Okay. And then next one, foregoing the seller contingency of your buyer's existing home. Okay. So if your buyer is looking to purchase, okay, you're helping them purchase, but they need to sell their home as well. You want to let just put in no contingency. Okay. And you can only do this if the borrower can carry both of these mortgages. All right. So there's no necessarily pressure on them. All right. They can carry both mortgages. They have enough funds. And again, makes it very attractive for the seller. Okay, they don't have to worry about you selling your home or dealing with all that mess. They know that you're going to buy the property anyway. All right. Now, this doesn't happen for every client. You just got to make sure. But for those clients, some clients actually may go initially and say, Memo, when you list my property, I want this to sell and then I want to buy ideally. But, if you're realizing it's causing too much of a headache and you're not getting any of your deals, you might go, Memo might go back to Mr. Jones, and Mr. Jones say, hey, you know what? I know this is not ideal, but maybe you still just go ahead and purchase this home, even though this is not on a contract and sold yet, which I know that might, especially since it's a seller's market, but there might be a unique situation. You might go back and say, since you can cover the two costs, it's going to be temporary. How about do it if it gets your foot in the door and gets you the deal? So again, just another option, take it or leave it. And this is the last one, and I'm hoping this is going to be just under 2 hours, which is the binding backup, okay? Your binding backup offer, which is really cool. Basically, you are, it's if the first deal doesn't go through, they will not renegotiate the terms of your offer. They'll just move forward with your deal, okay? You will be the very next deal that they take. Many agents and buyers, many agents and buyers just move on. Hey, this is where you can take advantage of this, because there's that stigma everybody realizes in the industry. It's a seller's market, so they're just moving on to the next one. They may not take the time to even put this together. This binding backup. They're moving right to the next one. You're still showing other properties anyway. If you go under contract on another one, then you can forego that one. All right. And again, take advantage of the fact there's a lot of overzealous offers that are being put in. There might be a situation where a client put in a large earnest money deposit, but the agent didn't ask if they were willing to pay over the appraised value. So the value came in, they were willing to purchase for $360. Value came in at $350, and they were not willing to pay over the $10,000. And I actually had that happen before on a deal I did where the client didn't want to pay an extra $5,000, and the deal went south. They got out of the contract. If you had a binding offer, would be the next, your deal could be the very next one. All right. And just keep in mind, guys, it's a crazy market. Balls get dropped all the time. Don't underestimate this strategy or any of these strategies. Review it. This is going to be available for you. Use what you think is helpful. You're not going to be able to use all of these. Just use it as you wish. Okay. And with that said, I hope you guys enjoyed this training. Thank you so much for being a part of it. If you guys have any questions, I'll hang on. I can answer any questions, but again, I want to respect your time. I don't want to make this go beyond 2 hours. Thank you so much. If you need to reach out to me, you've got my contact information. It's in the back office. We're here to help you close loans. My wife who works with me, she speaks fluent Spanish. She's just as good as I am. We have lots of different programs here to help you close your deals. And one of the biggest things we really, really believe in is working as a team. Communication is key, whether good or bad. It's about communicating, getting quick feedback, and trying to build rapport and build your brand. So I'm here. Thank you so much for everything. And with that said, I don't know if Bobby's on here, but if there's any questions, please feel free to reach out to me. I think I'm just going to end this now. Bobby, you there? Well, anyway.
Hey, Joe. Yeah, I don't know. I think Bobby is probably on a phone call. But Joe, as always, we thank you for your time, for helping us, with these trainings. We genuinely appreciate it. I invite all of you agents who are London Foster agents to reach out to Joe. You can find his information on londonfoster.net. Under the vendor section, he's actually the very first vendor on the list. So you can find his information there. I also included it in the chat. And one last thing, if you are not a London Foster agent, you can reach out to us via our website, which is www.joinlondonfoster.com.
Great. Thank you, Memo. Thanks, guys.
Thank you, Joe. That was amazing. Have a great week.
Thank you. My pleasure.
Thank you, Joe. That was great.
My pleasure. Thank you very much for being here.
Thank you, Joe. You're amazing.
Daniel, my man.
Hey, can you did you email us the slides so we can upload it to the back office?
Okay, sure thing.
Awesome, man.
All right,
Thanks.
buddy. All right, see you guys.